Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larbi.
Jamil, welcome back to the show. I think it's your second time on, and excited to talk to you again about what's happening in the real estate economy, the industry these days. But welcome back.
Thank you so much for having me. Yeah, I'm excited to dive deep into this space.
Awesome. So for those that may not have heard your first episode, maybe just do like a quick overview, who you are, how you got started in real estate, and then we'll dive right into it.
Yeah, absolutely. So I started off probably a good 10, 15 years ago, interested in real estate. Started off with student rentals, saw the cash flow opportunities, and then JV'd with some partners, and we bought our second and third, grew into a bigger business of buying flips. And then, fast forward to career, family, moved away. COVID kicked in, decided to put the career on a bit of a hold and focus on real estate full time. In the interim, I did pursue construction, education in construction technology. So I learned more about that and decided at that point that I could offer my services as an investor-focused realtor to people, because I was just being OCD with working with previous realtors and saying, okay, I'm just too hypersensitive to questions and not being able to get the answers. So I said, I might as well jump in, and for myself and for my client base, that I could help them with that.
Yeah, absolutely. I think, and I know I say it a lot on these shows, but working with investor-focused experts, whether it's a realtor, mortgage broker, or lawyer, is going to be key in getting you to that next level and helping you scale, because it's definitely very different from somebody just purchasing a house for themselves to live in.
Yeah, it's very different,
right? And they don't teach you this stuff in school. They also don't teach you how to be a realtor for investors in school. You either have to learn it, you've got to do it either, through doing it yourself, or or get into the industry by, understanding, doing networking events, going to, hiring somebody. But there's nothing in realtor school that teaches you this part of it.
Absolutely. The emotional decision of buying your first home or your personal home versus an investment where you just strictly see it as a business and analyzing it from, a lens of where's best use value for the property, what's the end use, ARV, all the fun stuff involved with it. It's a completely different sector of being a investor-focused realtor. Sure,
for sure. So I was reading the other day, and I can't remember where it was, but it's like almost 900,000 students that this government, I will leave my comments about how much I, hate this government to the side for now, but 900,000 students coming into this country to go to university or college in the next year. That's shocking. What are your thoughts?
Yeah, student rentals is, I guess, the newest and hottest thing that people are looking at. It's one of those things where it's always been discussed, where even in recessionary times or times of where tight, people focus on educating themselves more. And there's always a ratio between number of beds a university or a college has versus enrollment. And the number of international students that are enrolling to these schools has skyrocketed. And in relation to housing, purpose-built housing has grown substantially, though the supply is very limited. And what we're finding is like off-campus built rentals are also growing, aimed at students, but also we're seeing young professionals are coming out, and where it's blurring the lines between student neighborhoods and young professionals. And this is especially true for people who are in the Airbnb space or midterm space. We're finding that rising rental rates in student housing has led to, overcrowding in homes, and where students are essentially teaming up and saying, well, look, we'll take a 2-bedroom flat apartment, and they'll stick like 4 people in there. And so this is concerning from a safety and regulatory standpoint. And there's some places like London, Waterloo, and now in Hamilton, where they're creating these, bylaws where they're trying to ensure there's some safety in these houses. But just yesterday I was in a meeting and we were talking about rental room prices for rooms. And it's crazy because I know that you have a property that's farther away from Hamilton or in Mac area. And I'm hearing people are paying $900 for a room. And
Yeah.
this is with a bus ride to McMaster. Those numbers are not, those have shifted so much in the last 6 months that, we were talking last time we talked, I think we even mentioned like 750 for a bedroom. And that was close within the neighborhood. So you can imagine that drive for that price point, what it's doing for landlords to seeing the attractive price point, saying, okay, well, whoa, that's a lot of money. I don't need to do I can pivot, as we talk about, pivoting. So that's kind of my standpoint, is saying that there is lots of opportunity, and it maybe justifies the price points for people to enter into the student space or creating student space.
Yeah, I think that there's, an opportunity for cash flow with the student rentals now, more so than prior to the pandemic. Because a lot of investors got rid of their student rentals when all the students left and converted them into long-term rentals and or sold them along the way. And so there's such a shortage. There is an insane amount of demand. And there's also an insane amount of people that are coming to go to school, but I think they don't realize that once they're here, it's not that easy to get housing. And we've had some students that were, for example, like one person that's renting a basement in one of our units, which is not that close to Mac at all, was
Mm-hmm.
a hotel. And many people are living in hotels right now, which is insane
Yeah.
because they cannot find housing. I have no idea what the solution is, but I'll tell you, whatever it is, it's not going to happen overnight. I think we're going to be in, more, there's going to be less supply and there's going to be more demand with all of the people coming in. And, they look at it as a business, right? They want, the universities, the colleges to make money, et cetera, et cetera. But like, you've got to give them a bit of a heads up of like, here's what you're probably expecting. But it's shocking how many people are saying that they're in a hotel right now that are actually applying to my units.
Yeah, and we, with immigration is driving the population growth, as you mentioned, and we know that essentially new immigrants tend to rent first before buying their home, and there's cultural preferences around how the housing needs or multi-generational housing is seeing, and I'm seeing this across the board from first-time buyers to the renters, and you're absolutely right. It is. I haven't seen this kind of influx in all my time in this space, and I'm seeing lineups outside of homes for places that shouldn't be renting for that amount, but and it is because there's a desperation for places, and there's a disconnect there between the promise of great education, the promise of what we have to offer here versus reality of, okay, well, you might be under a bridge kind of thing scenario because there's nothing available. So yeah, it is a scary scenario, and the fact that we're seeing an oversupply of luxury new builds and many new condo builds are focusing on these luxury units, the demand for affordable housing isn't being met. And this is where, investors and that specifically can add units or utilize lodging, rooming houses, or what have you to support it is going to be where I think the market is trending towards, because, I'm in a few groups where I see a lot of immigrants or new students, and they're willing to put multiple mattresses in a room and share because it's culturally normal. Now, that's just, I think that's where we're getting to, which is an unfortunate bedroom community, and that's unfortunate, but that's where I'm seeing the conversation going, because they just have to make do with what they're here for.
Mm-hmm. Yeah, absolutely. I mean, do you think, in your opinion, that this is like all the universities, all the schools around the country? Do you think that it's, predominantly in the GTA universities that this is happening, or like, what are your thoughts? Like, what are you seeing?
Yeah, I can't speak to outside of the province here, but I can definitely tell you that from my conversations with other investors in all the way out to Windsor, to London, in our neck of the woods, we are seeing pent up demand and not enough supply. They can't, even in places where it's considered very affordable, there is a major demand, even up north, talking about Sudbury, Timmins area, we're hearing about a lot of immigrants from, South Asia predominantly, that are just taking up the housing, whatever they can get. And it's essentially the acceptance rates for these universities and colleges are higher than what's available, and they just have to figure out a place to stay, because that's a universal need, is a roofing over your head. So from what I understand in Ontario, at least, there is an issue for sure.
Yeah, absolutely. So you've got student rentals yourself, right?
Yeah.
What do you think? I mean, because obviously, it's a strategy like others, and there's pros and
Yeah.
cons. What are some of the pros that you are seeing, from being a student rental housing investor?
Yeah, the pros is, definitely cash flow, because you are not necessarily dealing with long-term tenants necessarily. You might get a second year student or a third year student after they're in their fourth year they're out, they're moving out. They're essentially finding another place to live. So your way the market rents shift, as I said, you can allocate that price point, and you're instantly dealing with, and you're not dealing with the rental increases that are, 2024 is 2.5%, inflation's at 5%, so you're not really impacted, versus you're actually getting cash flow consistently. That's one pro. Definitely the other fact is that usually you have some vacancies in the summer, so if you are including utilities in your rentals, you have quite low expenses in offset for the regular school year. And that's kind of my two main is heavily cash flow. That's the benefit of that. And yeah, I think that's kind of where I'm finding it, versus your long-term renters, where you have to deal with long landlord tenant board issues, a lot of complaints. And if you're doing international students, they tend to be very much pay the rent, or they'll pay 6 months up front, and you don't really hear from them, which is great from that point of view.
Yeah, and I don't think they're going to try to play the system against landlords either. I think they want to come, they want to go to school, they're likely going to be in and out, with maybe they're down the road, they're going to rent something more long term, but this is like their stepping stone, right? And as they come into the country, like we've had many people that have applied that aren't even in this country yet, and they're like coming, and they're like reaching out and asking about, they're mentioning that they're either in like doing their master's or, their PhD. And so there's actually a lot of mature students that don't necessarily want to particularly live in the vicinity of these schools. So they're fine, like you said, driving a little bit further out. But, again, like they're coming in with very little credit history. So there are, things that I do from a screening standpoint that may not require, a credit check, but, proof of making sure that they're enrolled in the school and like that kind of stuff. But I think, like, personally, my preference, like even for units, I know we just did 2 units to students. Actually, I don't even think one is even in this country yet. But they will leave at some point. I don't think that these are their permanent situations.
Mm-hmm. Mm-hmm.
And that will allow, especially for anything that's rent controlled, to reset the rents. I mean, again, that can change down the road, but right now, like they're in and they're out probably in 3-4 years.
Yeah, and the benefit is they're out at that point. They've established their education. They want to perform a career. They might have a co-op. They want to go elsewhere, travel. So the flexibility, as you said, there is going to be a vacancy. So it's kind of it is there. The vacancy is set up. And versus when we have a long-term tenant, and that's, as you getting back to, like, some investors had to dispose of their asset during the COVID because it was either rent to a long-term tenant. And I myself have seen it when I've driven around. It'll be student pockets, and they'll see a family, you can tell, and they are not leaving that house for the next 5 to 10 years. They're raising their family there. And that landlord is probably burning right now because he or she has now committed to a 10-year commitment, and there's no way that he's ever, and I mean, obviously he or she has made money, is going to be making as much money as the next door neighbor who's got student rentals. It's a trade-off, right? You might have a little bit more headaches with students and educating them how to use the house and the fundamentals of things like laundry machines, etc. But the things that students want now versus 5 years ago are drastically different. But as an investor, you should know and be aligned with it. And if it means an extra $50 to $100 a room, do those things, and that'll help you in the bottom line.
Yeah, it is. It is definitely interesting, and like you said, there are some challenges. There are definitely some downsides to every single strategy, and you named a few there. Obviously, you're covering expenses in the majority of them as well. I guess it depends on where you are and what the competition is like, but likely, you're getting an all-in price from the students. So, correct me if I'm wrong, but like as a landlord, you're covering the hydro, the water. I mean, if there's gas, you're covering gas, and whatever other expenses, likely lawn care as well.
Yeah. So you're gonna be putting down definitely a percentage for expenses on that asset. Utilities. What we you can structure it whereby you can have a cap, where I'm seeing that you just cap it at a certain dollar figure per room, knowing that kids are now gaming more, using internet is a critical thing, high speed. Those things are very, very critical. But yeah, absolutely, you have to account for either property management and all in utilities and expenses. So there is a little bit higher cost of operations versus a long-term tenant where they're taking care of the utility. Let's say if you have a duplex, they're taking it. But what I like to structure is a cap, a dollar amount, and they agree to it, and after that they have to split it, that amount if it goes over.
Yeah, that's a good idea. So you just say like, these are going to be the maximum amount of utilities that I will pay. This is based on the last 12, 24 months average or whatever that is. And then anything over, then you go back to them for the difference.
Yeah, I mean, if you depends on how many, yeah, exactly. It depends. I know some landlords who are doing it where they leave it to the tenants to pay it. I know that utility companies are pushing back on having non-landlords on the actual file. So it gets a little complicated, and students are focused on simplicity and they just want to pay the rent and be done with it, and parents especially too. So making it more convenient is easier for tenants.
Yeah, for sure. I guess another pro that I can imagine as well, like you mentioned, parents, is the co-signing option with a lot of these parents that are also going to be on the hook should the student decide not to pay.
Yeah, we always get guarantors co-sign on the lease, and that helps a lot with a responsibility. If a student starts acting up and starts, you're catching them not throwing out the garbage or smoking in the house, you can just be like, look, your parents are on the lease. Let's have a conversation. Not to be a tattletale or anything like that, but like it's a responsibility. You got to treat them like adults, and the best conversation would be a parent with their child to say, hey, you're growing up. You need to act professionally and like an adult in the home. Take responsibility for your actions, kind of thing.
Yeah, for sure. Now, do you find that there's a certain number of bedrooms that's like the magic number in many markets? I mean, obviously it's going to be different by market, to some extent, but is there like an average that you're like usually above this?
Yeah, it used to be seven and above. So the 8th, 9th, or whatever room is the cash flow. But with the market shifting so much to like potentially $900 a room, you're probably going to be in that five rooms and up are going to be where that 6th, 7th room is going to be profitable. Obviously, numbers reflective of what rates you're paying and what the market rent is, but I'm finding like 5 and up is going to be that sweet spot.
That's interesting. Now, what about furnishing the units, like putting a desk and a bed, like would that, and a mattress, like would that help with the increase in rents that you can get?
Yeah, absolutely. So for furnishings, furnishing the rent, you got to be careful now with certain bylaws. Like once it's considered lodging, and when you're offering that, the municipality tends to look at it in a different lens, and then there's certain rules on how the housing can be set up. And I won't go down that rabbit hole, but in general terms, as soon as you offer furnished rentals, like a frame, a desk, a lamp, side table kind of thing, basics, you have now opened up an entire arm for international students. They love that because they have nothing. They have a suitcase, and if you can offer them services to get them access to a mattress, now you've done end-to-end services for them. So you can definitely charge more. I know some people who charge per piece of furniture that they like, they charge that on a daily rate.
Nice.
And then they say, okay, if you want it for 8 months or a year, this is what the rate's going to be. I can embed it in the rent, or we can have a separate contract just for the furniture. So yeah, I mean, definitely there's if you can offer it, for sure. If you have that extra and you have that space to just continue to leave it. And then some students who are willing to pay a premium have their own furniture. They like their style. They have their dresser, their, everything that they want themselves, they'll bring from home. That's how it kind of sets up.
I mean, I think it would be interesting to even have it on a different contract for the furniture. Like I think of like Easy Home, right? They're like that rental company that many, people may choose to like, I don't want to like bash them, but like that's a really good business in the sense that like they're making a shitload of money off people, unfortunately or fortunately, I guess for them, but people renting, but like they're doing like TVs for, I remember my sister-in-law, and we told her never do this again, when she was renting from there, and it was like $70 a month for a TV. I'm like, we can just buy you a TV for like 200 and like you can pay us back slowly, you know what I mean?
Yeah,
but like, sometimes it's just like that convenience of it maybe, and people just don't see the daily rate or the monthly rate as much. However, I think, for students, it could potentially be an option, to increase as a landlord. The income would be potentially do something that's outside of the RTA, right? Just like if you have a contract with parking, there's some loopholes, like there's a little bit of a gray zone, like the same thing with the furnishings, right? I think there might be something there that's on a separate contract. And then, maybe something about like the damage and the wear and tear and that kind of stuff on it. But I think a separate contract with the option, I think, is a great idea.
Yeah. And just be like, if you have IKEA furniture, it's going to get beat up. Just expect it, but you're going to it's going to pay itself over 3-4 times over. The fact that, and I think the big thing you mentioned is that if you have international students, they have no credit history. They have nothing. So they have really barely anything that they can go ahead and do that. They might have cash, and they usually have a flush of cash, and they're willing to have that taken care of for them. Is the convenience of that they will pay a premium for. So if you can help them throughout that process, they will 100% pay that premium for it.
Yeah. Now, like, have you seen it being done? Like, do you know roughly like what people charge? I'm guessing it's what, like just like a bed, a dresser, a mattress, and a desk and chair. Is that pretty much what they need?
That's pretty much it. Yeah, they might. That's exactly it. They might give them a mirror too. But beyond that, that's it. Like, what else they give them? Yeah, exactly. Desk, chair. Pretty much it. Lamp and side table, and sometimes they don't usually give them, like lately, because of like bed bugs and stuff like that. You won't even give them a mattress. You give them like access to where they can purchase it, just because you don't want to have that an infestation. When you have a lot of people from overseas or a lot of people just moving in and out, that bed bug problem infestation can be a problem. So I don't know many of landlords that tend to keep the mattresses. They just tend to, you'll see it like right around this time of year, or I should say around September, end of August, you'll see individuals, or you see outside tons of mattresses outside, because people tend to, at their 4th year or the 3rd year, they're just going to chuck them. They don't tend to use them.
Yeah. But I wonder if that's something that you can just add as a separate fee too, right? Like your mattress.
Yeah, you get an affiliation.
I mean, I think you can
affiliation.
Build it up.
Yeah, I know a landlord in Waterloo that does that, and he's got a business where he's got an entire mattress business because he's got multiple apartments, and that's what he does. He just says, "Okay, what size bed do you need? I'll have the mattress delivered to you on the day of move-in. Come and pick it out the day before, and it'll be delivered as part of a service package. And he says that, like, I think he was saying like 80% of his renters will choose it because they're able to see the mattress ahead of time, and it gets put into their room the day of moving or the day after, something like that. It's such a convenient factor. He just has the capacity of warehouse space and things like that to store all the mattress types and all that. But he's found an end-to-end solution that way for sure.
Yeah, I mean, and especially with the high rates, the way that we're all experiencing this, I think many investors are feeling the pinch. And if there's some ways to increase the cash flow and help somebody along the way, then why not? But I really do believe that there's real estate, and this is what many of us were doing for a long time, and then there's like creating additional income sources, business sources from that real estate, and like renting furniture. If you're a student rental investor, could be a whole other arm to increasing your cash flow. I know we're doing like a lot of midterm and short-term stuff, but there's likely some additional business arms. I mean, we're all entrepreneurs at the end of the day, rather than just being a landlord and being passive. That there's likely some business and different income ideas that can be created from these types of times, because we have to think outside the box.
Yeah, I agree with you. There's and even with my multifamily investing for clients, we're finding that we're coming to the table, similar to some of the guests you've had on the podcast before. We're coming to the conversation, coming to the table where we're talking about, let's be creative. Let's see how we can both find a solution. And if the buyer sees an opportunity that the seller has maybe fed up with and doesn't see it. So, and that's that marrying of two sides of the equation. And it's not so much a lose-win. I feel like it's always a win-win. The seller gets the price that they want or a deal, and then the buyer sees an opportunity where they can utilize what lens they have as maybe multiple streams of income, where maybe it's not necessarily what they want to do. And what we're finding is that we're finally seeing a small shift in people in the multifamily space are starting to come around with their pricing and starting to be a little bit more not as objective to saying, okay, well, I'll be okay with a VTB, or I'll be with something creative in the sense of, okay, we'll come down on the price on this condition, So that to me is an indication of slowly coming to a balanced market, and people are starting to still, as you said earlier, there are deals to be found. It's just about how you attack that problem.
Yeah, I know before this podcast we were talking about you negotiating a potential VTB with a sale for one of our students, investor students, which I don't think 2 years ago was really. I mean, of course you'll have the odd ones, but it wasn't as common of a conversation where they knew that they could likely, even multifamily, sell it with very little amount of conditions, and VTBs were, if they didn't want to for whatever reason, they could still sell it at a premium price. And I think times have changed, I think for the better, because many of us were waiting for this time to be able to negotiate and get creative on some of the deals that we can acquire now.
Yeah, absolutely. I mean, it's I've had more I've had more in the last month or so conversations with sellers interested in this space and saying, okay, well, I'm now ready to come back to the market, because they're seeing obviously what's in the media and what's happening, and they're understanding the value perception of their asset is no longer the value that people are willing to pay for, because it's transactional. And the housing preferences or the investment preferences for individuals, as you said, the interest rates just don't make these deals make sense anymore. And if you're in a position, and the ones that are selling, and if you're in a position where you have to sell, that's where you're not getting a dollar for dollar value. You're getting like 80 cents to the dollar on what you're looking to sell. But if you have some patience, then you're able to negotiate and willing to do that for sure. And on a side note, what I've found is that properties in like the 400 max to 800 range are selling. Like, low days on market, they are, going at asking or slightly over. That's what I'm finding, that range where the first time owners or even investors are getting in and properties. Row housing and semis are starting to, like, the demand for those are starting to pick up, versus some of the detached homes are kind of staying on the market for 28 days, a little bit longer. So we're seeing a slight shift that way. But going back to your point, negotiation is there. So for anybody who's listening, making offers, making multiple offers is where I think the market's heading, and just throwing that dart at the board and just saying, okay, don't be offended, just like throw it out there, because you don't know everyone's position, and being that hyper focused on saying, let's get the deal under contract for the right price is very important.
Yeah, for sure. I mean, it is interesting to see how the times are changing. And are you seeing that, like, the ones that are in that 400 to 800K mark, are you like, or starter homes or whatnot, I guess, depending on which area, are they first time buyers or are they downsizers, or is it still too early to tell?
Yeah, a good question. So I've had two scenarios where people are getting out of something they've over leveraged. So they know what's coming down the line, and they're selling their $1 million property and they're downsizing. I've heard that already. Someone like in Oakville who did that, and they're downsizing because they see what's coming down the line. Like, okay, let's just downsize, and they're willing to pay full ask. And at the same time, majority I'm finding is renters who their rent have gone up so much that their mortgage payment is equivalent to what they're paying in rent. So they're just getting in at a property where they actually own it at that point. Majority of them are, the first time homeowners are just saying, look, I'm getting out of the rental space. I'm tired of being in a condo. I'll get a little bit of a backyard and my own home. It might need a little bit of work. We're finding that major reno homes that are like meant for, over $100,000, $200,000 in renos are sitting on the market longer, versus the ones that need cosmetic lifts are tending to fly off the rails real quickly.
Okay. That's really interesting. So what areas do you cover? Like, if somebody wanted to, go out and view some properties with you, what areas do you cover, and like what types of strategies are a lot of your clients coming with?
Yeah, so I'm essentially west of Burlington all the way out to the Niagara region. I cover, and including, Kitchener, Waterloo, Cambridge. I have properties myself in, Hamilton, Brantford, Cambridge myself. So I'm very familiar with those areas. My strategy is looking for underutilized buildings, and mostly, multi-unit, mostly multi-unit or conversion projects, where you can take a single family home and convert it into a duplex, fourplex, and then looking for, investors looking to do that. At the same time, multi-unit buildings 5 and up considered commercial, and looking at opportunities there for investors to see where we can use the highest and best use for those buildings, and targeting investment strategies a little bit longer term and higher capital to convert that asset, even using the CMA-CMLI Select program to improve their balance sheet, essentially.
Okay, awesome. That's perfect. So guys, reach out to Jamil. I don't know if we need to do a lightning round. I know you were just recently on, we were talking about something different. But I'm just going to ask you a few different questions, and you're going to try to give me an answer. It won't be like your typical lightning round questions. I'm just going to make them up as I go.
Okay.
You ready?
Yeah.
Okay, here's question number 1. If you had to buy something strategy wise today, what would it be?
It'd definitely be Strategy wise, it would definitely be multifamily and probably I know it sounds traditional, but probably the Burr model.
Okay. All right. Number 2, would you prefer to have JVs in projects and many more units, or less JVs and control over your properties fully? Which one would it be?
Yeah, I'd probably say probably more control over my own properties. I have JVs and I'm at a different stage, but yeah.
Okay. All right. And number 3, if you had to make a prediction, in 12 months from now, of what the market from a real estate standpoint would look like, what do you think that would be? Just a prediction. We can't hold anyone to it. No one knows.
Yeah. Prediction is I think we are going to see a further adjustment in pricing. And I think that it'll be a lot more into a buyer's market versus balance at this point. And I think, that's where we're going to be heading to in the next 12 months, if I had to make a prediction.
Okay. All right. Awesome. Jamil, thank you so much for being on the show. What's the best place for my listeners to reach out?
Absolutely. Thanks. You can catch me on social media, all the social media platforms at Jamil Rahem as in Mary, Tula. I'm on Facebook, YouTube, so Instagram. I'm usually pretty prominent on Instagram and on my website at jamilrahemtula.com.
Amazing.
You can even call me 289-401-1566.
Okay. All right. So that's awesome. Thanks for your insights. Thanks for all your help as well. Jamil is our go-to realtor for many of our projects that we do. So reach out to Jamil, and you guys are in great hands. Jamil, thank you so much for being on the show.
Thank you.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?